Good afternoon, guys. Welcome back to another stream, another video. Today, something more on the positive side than what we went through last time. A much better sort of, just a big sort of trade analysis of gold's move a couple of weeks ago. So basically, I'm going to go through the breakdown and sort of morning prep as well, because I was planning this trade for quite some time. As you know, gold was in a massive range. So we're going to do a good technical debrief of this, price action, and then a couple pointers at the end, as we normally go through. But this is basically sort of the technical, you know, just the gold breakdown of how I would do, as you've seen these before, the bigger structure, the lower time frame structure, what the footprint looks like. So chart on the candlesticks, what profiles, and then your 1 and 5 minutes, sort of that execution point. Just a little bit of a description of what price action looked like, and then you go in a bit more detail of what the footprint. But I'll just put this up just in case you ever wanted to pause it and read sort of my points, etc. But I'll go into what the charts look like, because it's much easier to describe from the beginning. So just the morning prep for this. Again, ignore all the handwriting. I'll describe that anyway. But this is this massive range that you've got for some time. You know, you sort of are in here for 2 to nearly 3 weeks. You've just got massive range. I'll type a couple things on the chart itself of sort of these points at the higher. There's just no real volume at the top. You manage to get this big upside move and reversal, because then there's no structure built up here for sort of that upside move that, you know, I was trying to play for yesterday. And then you sort of built the structure lower towards the end of this, is exactly what you needed to fill out, because you had this sort of empty zone here where you managed to build this out, etc. And you had FOMC in this as well, which is this move, which gets reversed. And you just got this nice range. You're just sort of developing this over time. So in these little circles here, you know, this low should really trigger this one, is exactly why I put. Your main sort of trade for this was the break of this zone down to these 66s, and really in a much higher volatile market, because it's really not, it's really stagnant, really sideways. And for me this week, I really struggle when the markets are like this, because nothing really moves in my sort of way. 200 ticks could be very simply, easily met in gold, but you got to let's say downgrade your targets. You know, again, this is another poor zone which you could look to break. It's more of, let's say, in the end, as you'll see afterwards, it's sort of like a 2-day play, really. And then we move on to what these profiles. So these are the weekly ones, and I know they're quite big blobs, but you've got these like long tails, there's a lot of long like V shapes, where this area needs to be more auctioned out before you get the break lower, due to the fact that you haven't got much time spent in these. So you need to come down, basically fill this out before then you get the offer through. You had a little tiny iceberg at the previous day's low. And the fact that these lows are nice and tight gives you that sort of trigger for this type of move to then offer down. Also an inside week too. And as you can see here in this little box, the target was to scale out below these and then try to hold the rest of the move. And a lot of this was very profile driven, of multiple days leading into one another. And I'll get more into that, where you get in this sort of, let's say, V, followed by another tail here, which fails to go lower. Then this tail then fails to go lower, and you get a reversal. Another tail that comes out of it, and it just can't seem to offer down. And what the fact is, in the end, is what you had to do is pretty much what which I've drawn here very badly, is that this zone in this box needs to be built out, needs to bulk out before you get any kind of movement down. And really, the fact is, the closer and closer this gets, the more bulky this builds out, you can then get the offer. So it was just multiple days of rejection until this zone has got enough time, and basically that's exactly what it is. It's just that time needed to be spent there before you get that unwind, because again, you've got this large stretch profile here which hasn't got any time spent, so it's just spent time over multiple days before you get the unwind. So that's sort of the prep on the day, and then I'll go into what the whole thing is, and then I'll go into sort of the price action. But this was after it all happened, and then this is the debrief you do afterwards in much more detail, because after all this time you're prepping this. Basically, this trade's been prepped from pretty much this time here. So these two V-shaped little bottoms, not really, you know, great areas because you're not leaving any tails or anything like that. You got this offer through here, which then had to be retraced, and basically then this has to be filled out, which is exactly what happened. So again, this building again, exactly what I said down here in these little scribbly zones. You had to bulk out before, as you see, you get the move lower. And I was trying to sell, don't get me wrong, in these moments. So you recognize what price action looks like, you recognize all the change, all these different components. Then when it gets to this day, you're able to take much more of a higher advantage. And as you see on the day, you slightly bulk this out a little bit more before sort of the changeover. You're not asking it to do loads and loads of time, because in these, every time is half an hour, every TPO is half an hour. So it builds it out slightly, and then you sort of start to get the unwind. And again, this isn't always going to be, let's say, one straight candle. This is just showing half an hour. So inside that half an hour, it could go like this or before it does that. So it's not like you sell it and it just immediately breaks. There's much more time. And so having the conviction to where that downside is, you've also got how the top side is, which again comes in very, like handy, because it just left so many tails at the top where you just got these selling tails where they're just willing to sell it every time it comes up, and then you get the move back down, especially this one. Such a massive sort of rejectant of this real massive bid up through all this auction zone, and then it comes back down. That can be it's like a very big squeeze, which then fails to build no structure up higher to have that possible move back up. And you've got all these little curved tails, which is something I've just called them. Each time you're going to the top side, you're not leaving bad highs, you're just leaving tails constantly. So you're having that sort of way conviction to the top side. What you're seeing to the top side is matching sort of the bottom. And then this is, I just scrunched up a little bit more to just give you that sort of view. So basically I can see it all. You get these little areas which have been filled in by this time. It's just really trying to picture your profiles all together and match them. It's just like a puzzle piece. And very easy puzzle pieces is like this one here. Is that the next day you just have this little balanced day out, which is filled in the blob that I've put in. It's basically what it is. And then there's this little scribbly zone over here, this like overnight structure filled in this little part. It's just like putting pieces of the puzzle together. Try not to get destroyed all the way through here. Try and make something if you can, or really try and understand. I was trying to really understand how these profiles have come into play. So it's a lot of this can be very, very profile driven, exactly where it's all come from. You see the chart and you could literally get sucked in selling here, here, and here, even here if you really want to play that move down. And you're losing multiple times. I did sell, but on the time that you just got to then leverage up and make sure you go for it. And then basically this is what it looked like afterwards. And then this is sort of that 2-day sort of play where this day becomes really more of a grind. And you've got this little pause zone here. On a normal day, this can just do the 200 ticks. It hasn't got the volatility currently to do that sort of move. So you're basically taking what it gives you, understanding that it's not. I generally felt like you possibly could get down here, but I stuck to how I wanted to play the trade, etc. And this is just the 5 minute. I haven't actually drawn anything on this because it's sort of self-explanatory that the move was so, let's say, all the way down this move is that every time you basically made a new low, it would just do this. So it would make a new low, as you've seen every time, and just do the V shape pretty much every single day. So coming into this, what you had to have is that the low basically had to stay. You couldn't sell lows, but in this situation, I suppose you can, but there's no clean structure at all in this. It's just a lot of messing you about until you notice something in the real change before you get that sort of liquidation down, because selling in here and trying to build a position is so difficult because it comes down and it bounces. You know, you feel like this time here maybe is your best chance. I believe I did sell in this zone as well. And that was probably your best, cleanest, lower time frame structure to be involved. Doesn't necessarily work, but it's the way I ended up looking at it is that any low that breaks, with obviously some good volume, must hold. That's the only way you're going to really have to find access in the end, because you had also the low from here. Once it spiked down, it literally was there, the next key low. So that low must have held for it then to offer. And this is exactly what you got in the end. Obviously, there's a lot of words on here, but you got this. That was the chance I sold in this little orange circle. And then I think what's quite key is the delta is very, there's selling there. So these buyers are then caught in this zone. Maybe you can then look to work in this area. People would try. Don't get me wrong, people would try and get short because it's such a big level, try and preempt the move. But what I did is that I waited for the low to break. Try and stop forcing yourself to then, you're going to sell here again in this area, then you're going to sell here. You can sell it a million times. Eventually it went, but the way I was trying to tell myself, you can only play the break. So played the break. I actually, as you'll see, sell literally the bottom of this, very small, because I was not getting a great price. If it was going to offer again, then I would have sold much bigger because you're right above the level. But as you'll see in the execution, exactly what happens. And then obviously you get the big delta move on the way down. So this is how it formed. It did a really big squeeze in the beginning, which can be quite painful. I've seen it do that multiple times before on a move where it breaks, it squeezes the whole candle, and then it comes back off. So I can gain some high conviction out of that type of play. Footprint wise, and I think this is another good point, is that you get that really quick blip, which just leaves multiple zeros. What it then has to do is come back in, fill this little low volume out, and then roll over. This is something I sort of noticed afterwards. It has to fill in the zeros before then it rolls over. You get 130 lots sold into the bottom. Literally the level is like here, hence why I sold it. And then I had to then work out a bit more passively to then bring my price back to around this area before then I sold some more as we go lower as well. But also, as I'll talk about, getting some good size away, but I was clipping in so small. If you was clipping in much bigger, you'd have such a better risk reward of getting, double the amount of size on, etc., etc. And this, I think, was probably the key part to this. Well, I generally just think it may have just been me that noticed it, but it's sort of risk on from the US Open, which I haven't seen risk on movement for a long time, where you're getting all the bonds come off and the gold come off and the S&P rally. So this was very significant, and I noticed it straight from the beginning as the S&P Open. So each candle is representing 230. As you can see, you've got the S&P going bid, T-notes offering, Bund offers, gold offers. Obviously, for 15 minutes to spook, then it reverses. But I think it's that trigger of the open. Also, that I just noticed this risk on move, and I was like, wow, you haven't seen this for a long time. So just that remembering also previous times you've seen risk on moves, like last last year, the year before, and just having the conviction of what you're seeing. So this gave you that extra little bit of conviction to be involved. If the S&P wants to go bid and everything else still offers, you can't really sort of say no to it. But get into some price action. I'm going to watch it. We're going to watch it all, and then I'll talk through it. It's last sort of 10 to 12 minutes. But basically, you've seen the open, so I'll hold on and just pause. I know you know where most of the ladders are, but you can see SPU here, Bund here. If you want to look for the sort of correlation play, gold is here. I do bring also another point is that gold was on the roll as well. This was basically the day it rolled over to the newer contract with the more volume. So I actually do bring in April. I believe it was, or May, one of them. May, yeah, April. So I do bring that in at some point, and I think I did make sure my ladder's paused. But so you've had the open now for a couple minutes, and you started to notice pretty much what was going on. Also, the market is actually quite thin as well, compared to, as I'll drag this over and then it'll pause. So what you've got here, so you'll notice that this is much thinner than the April, which is I always felt was quite a little bit surprising, because you've got 56,000 traded there and you've got 72 here. So there is a slight difference, but you're going to trade the contract which has got more liquidity, etc. So you've got a few thousand difference there. You've got sort of 12,000 or so, 16,000. So the difference is I was just basically trying to see what was happening sometimes on this ladder. So if there was a big, like say 100 lot, 200 lot, you could lean on that. I wouldn't be looking at this if there was so much more significant volume being trading in the gold at this time. But I just had them up just for a reference and an idea. So anyway, I started to notice sort of what risk on was happening from the open, and mainly I was you're getting close to the level of like 97s was the level. So I'm just being aware. I'm not going to try and sell this preemptively because I didn't feel like that was the right option. So you get a slight break, and again, this could easily have bounced, but then you get the much more volatile break, which you haven't seen for a while. You jump in 20 ticks is quite significant in this range, and obviously the level is here, right below the low. So I thought I'd sell anyway, and if it offered again, I'd have just sold really aggressively. But this is what made us, well, I say a slight difference, but this is exactly what you've been seeing the whole time gold has been breaking the low to try and break this area. You're literally just getting a constant squeeze every time you're making a significant break of 20, 30 ticks, mainly 20. You're just getting this massive washback. So obviously you go 20 ticks offside here, and in my head I always think about the candle itself, especially when you're breaking lows. So you see this in multiple markets that you can get, or mainly most of it really gold, but you get the whole squeeze of that whole candle, which I was willing to accept, and I was willing to peep sort of like up here once it sort of breaks the top of the candle. So mainly what I started to notice quite a bit of reloading on the offer, and the offer kept coming back rather than it kept going back higher. So I started to then try and work in a bit of a smaller position rather than trying to be way too sort of aggressive on it. So the sort of area you're holding, sort of those 22s to 23s, and I'm just trying to then understand that the fact that when you get those very quick offers and they blip and they squeeze the whole candle, they have to then fill in this on the way down. So it may take 2, 3, 4 minutes to rotate back through that one large candle it creates. But it comes back, and you see sort of every time that 20 to 17s, this area just keeps reloading and pushing it down. Again, you get a bit more bigger size come on the offer. So working out to sort of 3 lots. Oh, I'm sometimes at times keeping an eye on this, the S&P. So as we come back down to low, I feel like it was the right time to sell into it. Maybe it bounced, maybe it not, but try and get a couple more in. So moved up to sort of 5. And at times I was thinking this ladder is so much thicker, which I was very surprised with. But we sort of basically kept holding my price. We've come back down, we've filled it out a little bit. There's still a little bit of low volume, but you've come back down. And the fact that we've actually come back is a very significant point, because we haven't been doing that at all. They just keep reversing and reversing each time. So I'm sort of clipping in with the ones, which I think is the wrong idea. I feel like I should admit, you could have got much more size where I basically clipped 10 times, where I clipped 5, much easier. But the fact that we're really stuck here, this is the error. So I was willing to puke back above, and the fact that you're just getting pushed back down each time can bring that, just brings that conviction that the sellers are here this time. And as soon as this bit of absorption disappears, you can then just get this little, you're just going to get the unwind through the level. That's where you can be aggressive. You know, you get this 40 lot that keeps flashing at double O's. So you've got a few ticks risk here. And then I was willing to let this break and then add below. So now you started to break. I was thinking, okay, a little bit more, then just start selling. You're on the level now. So you're looking for that cleaner break. And then you get, now I saw 95s into the low. And then you start to, just the offer just starts to be so sticky, and it just comes back each time, just reloads on the bid. Obviously it's much thinner. So that's how I was really trying to focus on it, is that you had 20 to 30 lots on the way down, just reloading the price. And the offer just kept being so sticky, it just couldn't bid up. The offers were just coming back in and slamming it back down. But I paused it here just because that you're now through those 97s. I've got basically 2 clips on. This was the point here. I feel like you're safe. You shouldn't really be going back above the level now. You know, my price is up here, good price, but I was sort of hesitant that this is the area now I could have got doubled the size at least. Got a couple clips in, it shouldn't really go back above. You can see how much the selling is. You've got all the delta that's coming off. The high conviction move is basically for these sort of 30-ish 5 ticks really to cover down here. So this was the point I should have been, when I've watched this back, I actually said to myself, you should be selling more, but I was too worried about basically bringing my price down to here, you know, doubling up, getting 16 lots on, or even, you know, 3 clips. This is where you should have really jumped in and started to pile in. Even on the way down, I should have been willing to get bigger. So this was the point where now, like I say, you should be getting bigger. You got really tight risk here. You shouldn't really start going back above this point where it, you know, again, you just see the offer reload every time, comes back to 20 lots, 15, 16. And you're just playing the one, you know, you're just playing that sort of one timing frame, because this is what the momentum should be doing. This is what the breakouts should be doing. I should be willing to get much bigger on this. So I'm up to 10 lots now. Now I feel like this is now the move's going to happen. This is where your good amount of ticks are. I felt, you know, there's no need to worry and sort of panic, because you've done the hard work and then you get the blip down. And I felt like this could just really go if it does go. So looking to then scale out below this area, see what we can do. So I covered up to 3. And mainly just like I say, the April was just because of the difference. The volume was so close, there's only 17,000. And you can see this is much thicker. Like I said, if there's a couple hundred lots somewhere, you can then lean on how that's trading. You could see it. But over the course of the next couple of minutes, you'll see that this is where I try not to panic. In my head, I said, you've done all the hard work. This is the right trade. You've covered, I know I've covered like a third of the position, but I shouldn't really need to cover anything else now. You've come off. This could easily extend, you know, much lower. You know, my target really was like 200 ticks. I mean, it's very excessive, but there's much you could have really started to unwind. But at times in my head, especially when it starts coming back here, I did think that it's not actually going to happen, is it? I'm not going to actually be paid for the size I have on, even though currently up like 4K in this. But I generally thought, I think my target's like where I'm going now is that just in case it really just starts to unwind completely and it just does one of these blips. I've learned this from Alex at times that he always says, did you not only put any bids down? And I'm like, or offers? And I'm like, no, because I just want to hold everything. You know, this is a good strength that I'm slowly getting to at this point, that I'm quite good at not getting out of something. And especially when you've built this playthrough so much time, you shouldn't have to panic and worry. You can let now the trade develop, especially as you can see, like the risk on part. I mean, this is the 15 minutes, so pretty much you still got another 5 minutes of the bid, and it's done the core part of the move. So I basically covered half now, and in my head I'm thinking, okay, I shouldn't have covered any more, but at least I've got half on. Again, this is something I can sometimes panic in those situations. I'm like, well, no, just keep holding, because the trade's got such positioning to unwind. You know, there's such more of a bigger move. You know, the way it's trading is just such a nicer way than how it previously is trading. And this is where you gain that, like I keep saying this, like high conviction from when price action changes. Now, and for me, seeing these much bigger ideas, for me this week, I think I've got sucked into a lot of rubbish, as you've probably noticed yourself, that there's nothing really happening that can generate this kind of move. And this is where I've lost, you know, a hell of a lot by not necessarily adapting or holding things that holding 30, 40 ticks or 30 ticks of good conviction trades are, or one good conviction trade yesterday, and I don't take any profit out of it, you give it all back. So then it's just under identifying a lot much of these bigger time frame plays that, you know, you're building and mapping over 4 or 5 days. And then you can generate this sort of conviction from the trade, because it's such more of a clear understanding. The way I've thought about this, such more of a depth of thought into it and understanding, and not too much panic, let's say, to the downside. Something I've been talking about, you know, with Eric really, is that I need to understand, and Richard too, is that I need to understand how I want to exit trades, because I'm willing to hold, try and bank something, try and find the core of a move. That's why I scaled out some at the 67s, of thinking, okay, this is your first target, you can scale out here. And then I'm just pretty much trying to run something, not being on a greedy front, but the technical play is just there to have a nice unwind. You know, you come off sort of 70 ticks now from sort of my price. And then you just keep getting this unwind. It just become a real nice, real thought out technical play. I think I've pretty much run it down to sort of double O's in the end. But this is where it sort of get a bit grindy, and sometimes I used to be, I'm just going to get out now. But I'm like, well, I don't need to get out. Nothing's really telling me to, like, get out of the move, shall we say. But I'll leave that point there. Watch the best part of the move. Get rid of that. So there's the price action of that. I felt like executed it, you know, relatively one of the best executions for and reward in the end. You know, my like best technical sort of move, and it's just adding a lot of it has come from, as I'll say here, constant mapping and the questioning of your charts. You know, you're building the picture towards the trade you want to be taking. Yes, you're going to lose money on the way, but as long as you're losing like a lot less than what you would make, and understanding and recognizing change of this price action, you know, and it's knowing when that trade's much more valid, you know, and you can put size on it and you can have high conviction of it. And again, it comes to, you know, that understanding of the strategy. I think you want to be, the way you understand, you want to execute, because you've got to decide in the moment how the day builds it. And then it's most importantly in how you exit the trade and where you want to take it to, because I think when you have that 30 tick target, you're going to hold that 30 tick target, compared to if you're going to have a 100 tick target. There could be some points on the way that you're willing to scale out. So if you tell yourself you're willing to scale out something on the way down, but hold a real good nice core to the 100, then you're just sort of banking something on the way down. And again, just four more pointers for me is that, I think, you know, I should have been clipping much bigger on the size on the way down, especially when we broke. I should have just gone, you know, I should have just gone full in on that. There's no reason for me not to. I'm just too worried about ruining the average price, and I've done good hard work, and that, oh, now am I going to be rewarded or not? Keep my average price where it is, rather than I could have just, you know, gone full size on that and done twice as good. Yeah, again, that's what I pretty much explained, ruining the average price. I should have just done a little bit of better questioning at this part, you know, on that front. I should have just done a bit more questioning on that moment where you know you're really right, and then you can just jump in. Not say I'd jump in, but, you know, I mean, really, really right. But yeah, that's the sort of real thought in depth of how this trade come about. There's a lot of sort of mapping over time, and then the changing of price action, etc. And you're just building and building and building a scenario, and then you can build even patterns during how this is coming across and learning. I'm trying to really learn a lot about how these profiles are really structured, and, you know, how what different bottoms and tops can look like, and just judging them. And I think this is where, for me personally, this week, I've been caught out on the low volatility environment, trying to think of some ideas and understanding how these look like. And, you know, you're just losing really, not easy money because you're having some ideas, but you're just not being necessarily rewarded at all, or the ideas just aren't really playing out and you're losing chunks here and there. But normal information, if you want to get in touch, info@axiafutures.com. I'll be back next week with another stream. Cheers, guys.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies, and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now, in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.